As we approach Election Day, Wall Street is gearing up for a major wave of market volatility. Bankers, traders, and investors are bracing for big swings, especially in bond and currency markets, as the country awaits the outcome of Tuesday's presidential election. Let's take a look at how the pros are preparing and what it could mean for the markets. With markets expecting significant movement, Wall Street banks aren't leaving anything to chance. From pausing software updates to setting up downtown hotel rooms for traders, the goal is simple: be ready for anything, especially once polls start closing. Citi's head of credit trading, Vikram Prasad, says he'll be glued to his screen with his team coordinating across the organization. The initial focus? Bond and currency markets, which trade through the night. We'll see stock futures moving too, but those will likely provide clearer direction in the morning when the New York market opens. Interestingly, one difference from past elections is the larger role of cryptocurrency markets, which trade 24/7, making them an unpredictable factor on election night. Market volatility has been rising across the board. The ICE Buffet Move Index, a key measure of bond market volatility, jumped nearly 40% in October, and the CME Currency Volatility Index reached its highest levels since last year. Traders are expecting plenty of action as election results start coming in. Goldman Sachs trading teams are planning a break early in the evening before diving back in as polls close, ready to work with their Asia-based teams to handle overnight trading. Richard Chambers from Goldman says, "We learned from previous elections that key info often comes through between midnight and 2 a.m. So it's going to be a long night for these teams." On the stock side, options data is showing a possible swing of plus or minus 2.2% in the S&P 500 post-election. While it may not match the record trading volumes we saw during stock mania, firms are making sure they're ready, with most freezing any non-essential updates to avoid disruptions. But while volatility is high, analysts are also urging caution. Columbia Threadneedle's Ed Al-Husseini calls the first reaction after elections a head fake. Sometimes the initial moves don't last. Remember the 2016 election? Markets briefly tanked when Trump was elected, only to bounce back within a day. As a precaution, some traders have been scaling back high-risk positions. JP Morgan's John Schlegel notes that many clients are adding hedges and reducing exposure, following a similar pattern to previous elections. And just as traders recover from election night, they'll be looking to the Federal Reserve's policy decision on Thursday. The Fed is expected to announce another rate cut, adding another layer to this action-packed week. High stakes, high volatility. This is what Wall Street traders live for. With markets set for potential swings, Election Day is shaping up to be a crucial event. Stay tuned, keep your eyes on the screens, and as always, be ready for anything.